So it's related to credit control and monitoring. So let us take the case that you have basically sanctioned a loan. You have sanctioned a loan or CC limit to an organization or to a firm over there, so as to a borrower. And further, whether you have used the best of the practices, best of the policies, procedures, and there was excellent credit appraisal, documentation obtained, each and everything was in line. But still there can be a risk. There is a risk basically that is related to default in the advance itself, and that could be related to the deteriorating condition of the firm itself, and that could be related to the willful default by the firm or the organization itself. Okay, so credit monitoring is very much required. Credit control and monitoring is very much required, which is oftenly referred to as LRM, that is loan review mechanism over there. So whether we say it credit control and monitoring or we say it LRM, one and the same thing over there. And let me tell you that it is very much required so as to ensure that whatsoever the funds which have been disbursed by the bank, which have been sanctioned by the bank, they must be used for the, they must be basically put on for the intended use. There must be intended use related to the same. And further, this is basically very much required so as to ascertain that the business continues to run on the projected guidelines, or whatsoever the projection line that was given by the borrower itself, that must be followed and that must be adhered to. It should not be the case. It should not be the case that the loan has been sanctioned and further after that there is no further monitoring of the loan or the control of the loan. So that is why control and monitoring is required. First reason is that we want to ensure that whatsoever the funds which have been sanctioned, they must be put on for the intended use. That is the first cause. And the second one, it is related to so as to ascertain that the business continues on the projected lines. There must be no deviation. And further, if there is deviation, in case it can be that there is some deviation, so you must be entering at an early stage and further you must be rectifying the same. Okay, so that is related to the second point over there. The third one, it is related to that the same already point I just said you did. If there is deterioration in the business that continues despite the appropriate action. So you have basically looking at the factor that there is deterioration in the project itself. The project is not adhered to the projected lines over there. You have basically taken the actions over there, but still you are not able to basically make it work. Okay, so in that particular case, the bank is to take harsh action. The bank is to take harsh action that is related to the bank can recall the loan. The bank can basically seize the security itself. So those are the avenues which are available in the bank itself. So that is why loan control and monitoring is required. And further, early detection is very much useful. And further, if you have detected it at an earlier stage, definitely you can rescue from the same. Okay. Further, let's move further to the second point, that what are the tools over there for the credit monitoring or the loan review mechanism over there. So first of all, it is related to definitely we can do check the conduct of the account. So whatever the loan accounts that the borrower is maintaining with you, whether it is a CC account or the term loan account or any other type of the account that the customer is, that the borrower is maintaining with you, definitely you can look into the conduct of the account, that the how the account is being operated by the customer over there. That can be that can be basically checked by looking at the overdrawing, that whensoever the account was overdrawn means what, that if you have sanctioned the CC limit for rupees 5 crore, and the drawn balance is almost always above than 5 crore, that is over and above the 5 crore over there. So in that case, what we can say, we can say that the account is overdrawn. The second, it is related to return of request or bills. It may be the case that the negotiable instruments have been issued by the borrower and further those have been returned or dishonored. It may be the case that there is delay in submission of the stock or receivable statements, because there is an obligation on the parties over there. If it is related to the terms and condition, there is an obligation. There is an obligation on the party over there that they are to submit the stock statements or the receivable statements. And if there is delay, that is basically related to deteriorating quality over there. It may be the case that the turnover of the project is not as per projected. So the projected turnover by the borrower was given to be around 2 crore rupees, but it is now only 1 crore, around 1 crore. So that is basically related to what? That is related to low turnover. It could be the case that transactions are being routed through some other account, because I already told you, whensoever a CC limit is sanctioned, there is an undertaking which is to be taken from the borrower itself, that the borrower will be routing all the transactions through the CC account only, or the current account only. Okay, and none of the account must be maintained with the other bank. That is an undertaking that has to be obtained. But still, it may be the case that the borrower is maintaining a current account with another bank, or is basically routing the transaction through some other bank. In that particular case, that is also related to, because the customer do not want to basically route the transactions through the CC account over there. He do not want to pay it. Okay, and for the delay in payment of interest or installment, that is basically a direct reason that you can check the deterioration quality of the asset itself. Further, invocation of the bank guarantee, etc., are some of the unsatisfactory feature. So that is basically related to, you must be looking into the conduct of the account itself, that how it is working, what is the exact position right now, and you can get an idea about it, that how the loan is basically working. That is, you can do monitor it. Okay, so in such cases where the account position is deteriorating, the banks can strengthen their monitoring. How it can be done? That is related to investigation, or we can say inspection. That is related to inspection, frequent inspection of the borrower's godown. You must be checking that the stocks are being maintained or not, or the stocks which are over there are not old stocks, or it should be the case that those are dumb stock over there, that is basically being stored by the borrower over there. Further, ensuring that the sale proceeds are routed through the borrower's account maintained with the bank, very much required. And further, insisting on pledge instead of hypothecation. Pledge must be insisted upon in case there is deteriorating quality of the asset over there. That is related to what? In case of hypothecation, you are aware of that the possession as well as the ownership both remains with the borrower itself. But in the case of the pledge, the possession of the goods, that remains with the lender itself. Okay, so that must be insisted upon in case there is deterioration quality of the loan itself. Then further, it is second point, that is how the banks can basically, what are the tools available for the LRM over there. The second point, it says periodic information submitted as per the terms of the advance. So whatsoever the terms and conditions which have been imposed to the borrower itself, the borrower must be having an obligation that he is to submit the statements at the periodic intervals. At the periodic intervals, those must be submitted. And if the borrower is not able to submit that, you must be looking into the point at why he is not able to submit the statements on the same periodicity. And further, you must be scrutinizing the statements so submitted by the borrower itself, because there is much information that you can infer from those statement itself. Okay, and you must be positively verifying, you must be positively establishing the statement facts itself. So if the borrower has mentioned that he is maintaining average stock of rupees 1 crore, you must be checking, you must be basically, there must be a surprise checking or a surprise inspection to that particular regard, that if he is maintaining that particular assets or not. Okay, so that must be done. And then it is related to detection of non-moving stocks and old receivables, very much required. I already told you that if you sanctioned a loan amounting rupees 10 lakh to the borrower over there, and you said you were to maintain a margin of 50% on the stocks, that means what? That the borrower is to maintain a stock of 20 lakh rupees so as to maintain the drawing power of rupees 10 lakh. That is the case. And further, when you just visited the stock godown over there, he was maintaining the stock amounting rupees 20 lakh, but that was non-moving stock. But that was what? That was non-moving stock that he is not able to sell. Okay, so is that stock worth for you? No, that is not worth for you. So you must be detecting the same. Okay, and further, that is related to the danger signal tool. It is not only related to that it is marketable or not, it is also related to the fact that the business is in danger, and you must be basically you must be taking some appropriate action for the same. The third point, it says stock receivable audit conducted by the bank. So stock audit is used by the banks in case of medium and large size accounts, where the account size is medium or large. In that particular case, we must be verifying the stocks during the normal inspections, and further, that is not even sufficient. Where the loan size is large or medium, in that case, even if we do conduct the normal inspections, that is not sufficient. Why it is not sufficient? Because it may be the case we are not able, it is not viable, it is not feasible that we are able to inspect the stock, because it's quite huge over there and quite large in quantity. And further, it may be this case that the stocks are located at the various locations, so it is not possible. So in that particular case, stock or receivables audit must be conducted. Okay, and further, the fourth one, it says financial statements of the business auditor's report. Now this auditor report is basically a financial report that is available. That is a financial report that is available. That is an audit report. Okay. Now you can do analyze the report which has been submitted by the auditor itself, that gives you brief information related to that how the funds were diversed, what is the financial health of the firm itself, the how the debts were realized, profitability, etc. Each and every factor is listed over there. That is also a tool related to the LRM over there. The fifth one, it is related to periodic visits and inspection, that I already told you that you can do visit, you can do inspect the firm over there. That will give you a brief idea that what is the financial health of the organization, and further it gives you an impression about the activity level. You can do basically, it helps in finding out the position of the stocks. You can do look into what level of the stocks is being maintained, what are the other assets which are being maintained, on which the bank charge has been created. You can do verify the bank charge also. You can do verify the bank charge also. The sixth one, it is related to interaction with the selected creditors and debtors. Interaction with the selected creditor and debtors, because those are also important. Those are also important. If the financial statements of the firm shows that the stock has been purchased from the company XYZ, let us take the case that there is a firm ABC, and basically it shows that it has purchased a raw material worth amount rupees 50 lakh rupees from the firm XYZ, and for the financial statements entry basically indicate that, and you just visited the XYZ firm directly and further asked at what amount of the stocks which have been supplied by the XYZ to ABC, and they said they have supplied only 10 lakh of the raw material. In that case, basically you can check it now that if it is right information or the wrong information which has been provided by the firm itself. Okay, so that is, you must be interacting with the selected vendors and for the selected creditors or debtors too. Okay, and for the periodic scrutiny of the borrower's book of account and the accounts maintained with the other banks, that must also be looked into. For the market reports about the borrower and the business segment, whatsoever the market reports are available, whether those are available by the credit information companies or whether there is a feasible market report that you have basically gathered information personally, that must be taken into account. Okay. After that, it is related to appointing bank's nominee on company's board. Wherever you have sanctioned a large amount of the loan, large value loan to the firm itself, in that case, if you want to have a role in the management side itself, where you want to look into whatsoever the different important decisions are being taken by the company, in that case you can do appoint bank's nominee on the company's board itself. Bank's nominee on the company's board itself. Okay, so that is related to the LRM tools which are available with the bank over there.